All right, well, sticking with stocks here, with stocks closing mostly lower after the Fed held rates at zero. We want to bring in our next guest. We have Keith Lerner. He's a chief market strategist at SunTrust. And Keith, you just heard Jared going through some of today's market moves, but I'm curious just to get your reaction to the Fed statement and also to Fed Chair Jerome Powell's press conference, because it initially seemed like the market was satisfied when we got the statement from the Fed, but some of his comments about the economy and some of the risks to the recovery, I think, is what really got investors' attention and what spooked the markets a little bit.
Yeah, well, I don't think there's anything that was dramatically different. I think on these Fed days, markets tend to have some moves that really are unexplainable. Of course, there's incentive for him to let the markets and the economy know that they're still full force ahead as far as providing monetary stimulus. And there's also probably, they want to put some pressure on Congress to go ahead and put through a fiscal bill. But more importantly, from my perspective, is not what he said, it's what happened in the market today. Transportation stocks, new all-time high. You know, that you don't have that happen during a very bad economy. You have autos near an all-time high. You have a lot of the retailers near all-time highs. And then you just mentioned materials are really becoming market leadership. We upgraded that group last month. And industrials as a whole is coming on really strong. So I think part of what you also saw is, you know, technology and some of the quasi technology is still acting a bit heavy, and you're still seeing that rotation. But I would say the underlying tone in this market, despite what Chairman Powell said, is one of recovery for the overall economy still.
And so I guess, Keith, to that point, and, you know, I think when you look through even just today's, you know, winners, hotels, airlines, reopening, all that kind of stuff, is this starting to more clearly outline an idea that I think have been swirling for the last couple of months, which is that a real big bet on a reopening economy might be market negative because of the weighting of some of the tech names, and that rotation just on a mathematical compositional basis would necessarily bring the level of the index lower, but would broaden out the individual, you know, sector and name gains.
I think that's exactly right. I mean, you know, don't forget, I mean, the growth trends and technology, the earning trends is the only sector where forward earning estimates are above the old highs. So they're still positive, but things don't go up in a straight line. They've outperformed so much. They're going through a reset right now. It may take some time, maybe the next earnings season, for them to reestablish some leadership. And then, you know, in the interim, what you see during a bull market is rotation, kind of a stealth market rotation. So you're right, maybe the money isn't being, you know, made at the headline index right now, but there's plenty of opportunities below the surface, and we're seeing that on a day like today.
Keith, Ines here. I'm wondering what you're seeing for the markets as far as volatility as we get even closer to the elections, especially if we don't see who the clear winner is on election night.
Well, you know, historically in September, the market, whether the incumbent party wins or the incumbent party loses, you tend to have at best a sideways market to maybe a little bit of a move down. As you get into October, that's typically historically in every election since 1992, you've seen the volatility index move up. So, yeah, listen, I think we'll likely see a pickup in volatility towards the election. If there was a sell-off based on the election outcome, to us, based on the underlying economic trends and the relative value, we would look at that as an opportunity. And we really want to stay focused on the primary trend over the next 12 to 18 months. And we still look, the way that the evidence in our work still suggests that's higher. So, the other thing is, you know, that's the number one question coming up from our investors. And you have to remember, too, if you make a drastic change before the election, you know, what's going to get you back in? And you have to get two trades exactly right. And I think the overall direction of the economy and the vaccines, which you just spoke about on the prior segment, will be more important for the stock market and sectors for that matter as well.
Keith, I want to get back to this little interchange you had with Miles, because, I mean, that's some crazy stuff. So basically what you guys are saying is that the markets, which is to say the index, could go down while most stocks could go up. I mean, I saw this thing that the 5 biggest, you know, stocks, the FANGs, of course, with the FANGs. So the FANGs give back, but the other 490 stocks in the S&P are up. And so you could have a situation where your investors' portfolios are really kicking the benchmark's butt or something like that, right? I mean, has that happened before? Is that possible?
Oh, yes. You know, people look back at the technology bubble. Again, we don't think this is a technology bubble, and we don't know that technology's run is over. I think it's taking a rest. But going back to your question specifically, in 2000, when the technology bubble burst, over the next year, the average stock was actually up, but most people just remember the headline index, which was down quite a bit. So yes, it's definitely happened before. And I would think at minimum, even in our strategy, we've been really much more overweight growth and quasi growth. We took a step towards upgrading materials last month, and I will say industrials are coming on strong. So yes, you want to have some things outside of just the S&P, and there's sector opportunities. And near term, it looks like those trends are set to continue.
And Keith Lerner, Chief Market Strategist at SunTrust. Always great to have you on the show. We'll see you again soon.
Great. Thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.